Hi, everybody. This is Gary Dean, and this is our weekend video report for Sunday, June 18th, 2017. Happy Father's Day to all you fathers out there. And let's get started. I really don't have a whole lot to go over. We've been in this holding pattern for quite some time now, and the expected weakness that we had from say going into last week into Monday, tomorrow, really, we've been getting the drops, but they've been getting bid right back up again, and we've been closing nowhere. So it's, right now, it really depends on how you want to view the chart. You can view it as bullish. There's some bearish patterns. And when you don't really have any clear advantage, just from a technical standpoint, and as well as Woody's technical turn date, where the weakness is supposed to end going into Monday, and after that you really we just want to let the market do what it's going to do. If it's going to go higher, then that's what's in the cards. It obviously didn't do exactly that. What we were anticipating, or what I was anticipating. I would have liked to have seen some of the weakness that we saw over the last few days just have some follow through, and it didn't happen. And now you just kind of have to, clear the slate, have an open mind as far as the direction, and wait for the next setup. So the preferred pattern has been, once this wave, five of three, or however we want to look at it, that we were going to get a pullback somewhere down into the, this area here before either heading down more, where that would be a more bearish case, or we come back up and make a wave five, that would be the bullish case. But like I said, this is, just some sideways action, and it's gone, it hasn't really done any follow through to the downside. So that would leave the door open that, if they can take out these highs, they're probably coming up to the, somewhere in the, the 2460, somewhere in that range. But if they come down, it would make sense if they test the 50-day moving average, because that's also support in this area here too. So, that would fit a profile too. So the overall, view has never been for that big move that Woody's anticipating to happen now, but to expect some choppiness. And we've gotten choppiness, but just, there's been no follow through to the downside. So that, that part of it didn't really play out as planned. So here's, let's just say, the bearish case, where we have a rising wedge. We had bearish divergences. We were overbought. We broke through the triangle, came back up, retested it, and came back down again. So this all, if you were just looking at this pattern and this move here, where it back tested it and we never made new highs, you can look at it as, as a bearish view, where we're coming down, and we're going to test the base of this wedge that would bring us someplace down at the 2375, 2380 area. That would make perfect sense. But what I've been saying is the bears need to push it through this support zone to get any momentum going to the downside. And we got a little breakthrough here, but you can tell it bid right back up again, and we just been kind of consolidating. So this could look like it's a bull flag here, and we're going to break out to the upside. So that would be the bullish case. So again, we have a bearish pattern. We have this support level that's been holding. And if it breaks above, then this pattern is going to turn into a bullish pattern, and we're probably, heading up to that 2454, 2460 level. Now, if the bears can push it through this support level and break through, say, this little channel here, then, we're going to probably see a move come someplace down between a 2404 and a 2398 level. So this is where I'm saying that there's really no clear advantage as far as pressing a direction, just because it can go either way and make sense. You can tell, you see momentum is just stuck at neutral. We don't have any bullish divergences, so there's nothing that's really saying that we have to head higher. But like I said, we keep finding buyers coming in at this support level, and it's really starting to frustrate some of the bears. So here is this triangle that we could be in, that we broke through it, and again we did a back test of it, and that would imply that we're going to see more weakness. Now, the bulls really have to push it through this 2440 level, or even a little bit higher than that. Let's just say to 2440. If they do that, they're going to probably get out of the woods with this bearish pattern. But there's also another one that's in play where you can see the checkered line with the black lines here. So this could be considered a descending triangle, and if what take place would be when we come down, came back up. You can see we're not making new highs, coming down and testing this support, and this would call for the move to come up to that 2440. But if it was going to play out this pattern, we would be then coming down and coming down to this 2400 level if it was going to follow this pattern. So there's again, the patterns are looking lower. We never really did a full digest of the overbought conditions, but we're not seeing any follow through to the downside, and we keep finding support come in at this level. So that's not bearish. And again, if you look at it this way, it's a bull flag. So there's you can really look at this market either way you want, and it can make perfect sense because the patterns, like I said, are bearish, but we're not seeing any follow through to the downside. We can look at the support holding, and it can be just consolidation, and from there we head up. So I would say, just from a technical view, this isn't really a bad time to just stand aside and let something play out one way or the other. Like I said, if we start breaking this support, then we're coming down to the 2400 level. If we break above these levels and get out of this, say bearish pattern, then we're probably heading up to the 2455, 2460 levels. So with that, that's really about all I have. Let's see what plays out tomorrow. Enjoy the rest of your day, and I'll talk to you guys in the morning.